Welcome to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
Hello and welcome to another episode of On My Way to Wealth. My name is Luis and I'm your host. Year-end 2022 is upon us. So I want to talk to you about a couple of things that you should consider to wrap up the year and also to set yourself up to start 2023 in a great place. The first thing is, if you have federal student loans, the payment pause is coming to an end December 31st, 2022. A lot of us that have student loans have not had to make a payment for almost 3 years now due to the pandemic. And it's very easy to get used to not having to have made that payment. And now payments are resuming. So you have a good month and a half right now to revisit your budget, log back into your loans, see what the repayment will be, and also make room back into your budget to allow for that. You know, hopefully you were saving it or maybe paying some higher interest rate, credit card debt or anything like that. But if you weren't, now is the time to go revisit that budget and make sure that you make room to start repaying your student loans as of January 1st, 2023. So that is a major one. As of the recording of this podcast, the student loan forgiveness program is being challenged in court. So that actually has been a pause. The Student Loan Administration, basically the Department of Education has even stopped accepting the new applications for loan forgiveness on their website until the case resolves. Now, the administration said that they still feel confident that they do have the legal authority to provide for such forgiveness. But in the meantime, whether or not the forgiveness goes through, as of now, the repayments are still scheduled to resume January 1st. So that is very important for you to revisit your budget and see that there's room enough to start repaying those loans as of January 1st. So that's number one. Number two is kind of look back in the year and see if there's anything that changed throughout the year that maybe you couldn't react to at the time, but now that things have settled down, you can look back and see, how did this impact me, or should I be doing something differently as a result of this change? Let me give you a few examples. A lot of life changes will impact how you handle your finances going forward. Number one, let's say marriage, right? That you get married during the year. If so, there's a few things that you should be considering. For example, have you changed your beneficiaries at work? You know, your 401k, maybe that's a sibling or a parent. You know, if you're married now and you want to have your spouse be the beneficiary, most people do. You want to go in there, make sure that you update that beneficiary. And that applies to your life insurance, your 401k, anything else, employee benefits at work. You know, a lot of us just had open enrollment as well. So make sure that you log in and any potential benefit they have, their health insurance and so on, that you update those beneficiaries. Same applies if you had a baby, right? So you might want to update either the beneficiaries to your 401k, your life insurance, and so on. So kind of just take a look back, because sometimes we can't react during the year to things that happen to us. But now that things are kind of starting to settle down a little bit, holidays are approaching, you want to take some time and see, okay, did anything change that I now need to go back and maybe make some adjustments? Unfortunately, let's say you went through a divorce. That's another reason. Maybe your spouse was your beneficiary in your 401k or your life insurance, and maybe they no longer need to be, right? Depending on your arrangement. So you want to just make sure that once a year at least, log into your 401ks, IRAs, life insurance, and so on, and make sure that the beneficiaries that you have are in fact the beneficiaries that you want to be there, right? You know, another major change could have been death, right? If somebody passed, you might need to swap out their name and your trust or your will and so on. So kind of just take a look back and see if there's any of these major life events, marriage, baby, divorce, death. Another major change that could have happened to you was a job change. Been working with a lot of clients who switched jobs during the year. So one thing is they need to figure out what to do with the old 401k. So that's a conversation that you should have with your financial planner. Hey, does it make sense to open an IRA and just roll it over? Or should I just roll it over to my new employer 401k? And then if so, you want to get familiarized with your new employer's benefits, learn if they provide a matching contribution to your retirement plan. Do they have a pre-tax and a Roth option? Do they match? What kind of investment options are there? What makes sense for you to contribute to, and so on, right? So you want to make sure that any change like that might have triggered something that you need to review, that you get on top of before the year's out. Now, speaking of 401ks, that's another good time right now at the end of the year to kind of go back into your existing 401k and see if you need to make any changes. Some of the changes that you could potentially make are the allocation of the funds themselves. You might have picked a handful of funds a while back and just kind of let them sit there and do their thing. It's always good to, at least once a year, you want to rebalance your portfolio. And what that means is you want to make sure that the allocation that you have currently matches your original intended allocation. So for example, let's say you wanted to have a portfolio that was 70% stock, 30% bonds, and the market has changed. And maybe now you have less stocks and more bonds. Maybe you're at 60-40 instead of 70-30, just to give you an example. What you then want to do is sell some of the bonds so that you can buy more stock and reallocate your portfolio, rebalance it back to what it's supposed to be. This is another thing that you can speak to your financial planner about to make sure that you're doing it right. And then also, the funds in their account, are they still working for you? Do you need to make any changes? Do you need to change the contributions going forward to a different type of fund? That's also another thing you want to make sure you take a look at. Do that at least once a year. Also, if you're on track to maxing out your 401k, congratulations. Take a look at it. Are you on track to maxing out? Find out where you are in terms of meeting that max. Right now, it's $20,500 for tax year 2022 that you can contribute to your 401k. If you're close enough, you still have a few paychecks left for the rest of the year, you can maybe increase your allocation to make sure that you catch up if you weren't able to during the year. So that's one thing you want to take a look at, because the contributions have to come from your paycheck. So now will be the time to make some changes to make sure that they get processed through payroll and you can continue to contribute so that you can max out in case you happen to be short. Sometimes you might be short, $500, $1,000. Hey, if you can max it out and make that tweak now, then absolutely go for it. Another thing too is preparing yourself for next year. The contribution limits for retirement plans are actually going up. And this is something that you want to revisit your budget and see if you can increase your contributions to be able to take advantage of that. So for 2023, you can contribute $22,500 into a 401k instead of $20,500. So that's going up $2,000. And also, if you're age 50 or older, you can do a catch-up contribution of $7,500 instead of $6,500. So technically, an individual that's age 50 or older can put $30,000 into their 401k. That's amazing. It's a great opportunity there. So if you're able to, something you want to revisit now so that you can make the change within your payroll so that you start off immediately from the beginning of the year and you don't have to worry about playing catch up later. So that'll be another great opportunity. Also, if you are able to contribute to a Roth IRA, you have until the tax filing deadline to contribute for the prior year. So for example, you have until April 15th, 2023 to still contribute to tax year 2022. So it's something else that it'll be a great idea for you to review, because you want to see, did you max it out already? Are you on track to doing so? If you're not, at least you can make some plans and say, hey, you know what? I'm actually $2,000 short from maxing out my Roth. You have some time between now and April 15th, right? So you can make that plan and say, hey, what am I going to do? Am I going to use some of my tax refund? Can I just increase my contributions now? And so on. Also, the contribution limits for IRAs are going up next year, $500. So you can contribute $6,500 in an IRA or a Roth IRA. That's another great thing that you want to do it now. So, you revisit your budget, and then if you want to do it evenly, whether it's per paycheck or per month, you can even it out, because it's a lot easier to start saving over 26 paychecks or 12 months than trying to play catch up later, right? So that's something you want to look at now so that you can make plans accordingly for tax year 2023. So a lot of opportunities there. Also, if you are required to take required minimum distributions from your IRA, so this is for my retirees, if you're age 72 or older and you're required to start taking the RMDs, they're called required minimum distributions, you want to make sure that you plan for those. First of all, if you're supposed to take one, you want to make sure that you do so before December 31st so that you're not penalized. And number two, you want to plan accordingly and see if there's anything you can do to reduce the income taxes on that money. So for example, if you are charitable, you can actually do a qualified charitable distribution. They call it QCD from your IRA up to $100,000. If you're a couple, you could do up to $200,000, $100,000 each, and take money out directly from your IRA, payable to a charity, and then it's not considered taxable income. So that's something that can help you because it can keep you in a lower bracket. It can help you not pay as much taxes on your Social Security. So it's another great strategy for you to consider. So definitely speak to your financial advisor about that. And then also think about any opportunities that you can take advantage of. For example, if you have young kids and you're saving money for their college, make sure that you understand the tax benefits, if any, in your state. You know, some states, for example, like New York, allow for up to $10,000 a year for a couple married filing jointly to contribute to a New York 529 plan. And that actually gets deducted from the New York state taxes, right? So this is something that you want to consider. You know, if you have a plan, make sure you understand the guidelines, the limits, so that you can make those contributions before the year end. Another thing, I've had some clients ask me about this too. If you have a lot of cash right now, you know, some people, because they had not been traveling as much, and so because of the pandemic, they've actually built up more cash than they normally would have had. What are some of the opportunities to take advantage of? Inflation is actually good for some things, you know, like if you are a saver right now, inflation is good. If you look at the rates of return on certain things like high yield savings accounts, they're higher than they were a few years ago. Same thing with certificates of deposit, CDs. They're paying a lot more than they used to as well. So instead of just having your money just sitting in the bank collecting very little interest, you want to look at those opportunities. Should I put my money in a high yield savings account? Should I put some in a certificate of deposit? I spoke about I-bonds, the treasury bonds. Right now, they're paying 6.89% for bonds issued from November until April of next year. Obviously, there's some limitations, so be sure to check out the specific podcast episode I did on that one. But in a nutshell, if you have money just sitting there that you don't plan on using for a year, above and beyond your emergency savings, consider an I-bond. You know, the 6.89% is actually not a bad deal, especially the money's not really invested, right? So you're not really risking the principal's guarantee by the U.S. government. So that's another great thing that you could take advantage of. And also, and this one doesn't necessarily have to do with money, I think that you should also reflect on the past year and see what are some of the things that you can change or get rid of that are no longer serving you. You know, whether it's money stuff like a subscription or membership. I do that as a business owner, kind of take a look back and say, okay, let me see everything that I subscribed to in the past year. Am I still using it? Did I get what I wanted from it? Is there an alternative that I can use, right? Can I eliminate it? Can I replace it? Take a look at that in your life as well. And that could be anything. That could be people you hung out with, any thought patterns, any habits that no longer serve you. And now, instead of waiting until January 1st, take a look at the things that you want to change going forward and get a head start on them. Think about that. Imagine you want to lose weight, for example, and you start now. By the time New Year comes, you would have had a month and a half of working on that goal, right? You can do the same with your financial goals. So don't wait till Monday. Don't wait till New Year's Day. Start now. I know easier said than done, but if you put your mind to it, you can do it. And you can get a head start. And believe me, you will thank yourself for it later because you're going to have over a month to work on it instead of waiting to the beginning of the year, you know? So start building that good habit now. So thank you all for tuning in. As always, if you have any questions, send me an email, luis@onmywaytowealth.com. And I look forward to seeing you in the next episode. Thank you for listening to On My Way to Wealth. If you have any questions, please send me an email at luis@onmywaytowealth.com. The information provided here is for information and education purposes only. The opinions expressed herein are solely those of myself, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by my firm or myself about other parties' information or accuracy or completeness. All information or ideas provided should be discussed in detail with a financial advisor, accountant, or legal counsel prior to implementation. Thank you.